Welcome, everybody, to our Long Options webcast. I'm happy to see you here, and it's a pleasure for me to be here as well. You know, there's a lot of different ways that we can identify targets when we're talking about these long option trades. And one of the ways is using some channels, and that's going to be one of our focus today, is how do you technically use that little bit of a channel to identify where maybe the stock might go? I am happy that we're going to review some other results here as well from some previous trades. Now, James Boyd is in the chat to help us out. Fellow redhead. Actually, we've got 3 redheads on the team. The other one you don't really know about. She's our producer. But we're going to take care of you here today. If you do have questions, go ahead, chat them in. I'll keep my eye on the chat. James will do that as well. And he might have to pick up some things I can't quite get to. But we want to hear what your questions are. If you're listening to this on the recording, and I know there are lots of you that do, when you have a question, put it in the comments section in YouTube, and I go back and review those throughout the week so you get your question answered very quickly as well. All right, let's go through our disclosures after a quick hello to Life in the Fast Lane, Michael J. Richardson, Will, Mark, Sharon, Ted, Cecil, and many other friends. Chris Carroll, while in, welcome every single one of you. Let's go through those disclosures. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes only. Don't consider a recommendation. We will be using the Paper Money software application. It's for educational purposes only. I think it's a fantastic tool for you to use as you're maybe trying to decide what rules you like to use. Using that Paper Money is a nice thing to be able to have access to. Past performance is no guarantee of future results. When we talk about trades, we will, for the sake of simplicity, we will not include commissions or fees, but just know you will have some commissions and fees to pay. All right. Always want to talk a little bit about long options. Appreciate Kevin stepping in for me last week in this discussion. We're going to talk about price, time, and volatility frequently because those are the main things that are influencing the price of the option. And we can't just only focus on what the price of the stock is doing. There's those other elements. And of course, we're going to look at a lot of example trades here today. In terms of long options and kind of how to think about this particular strategy, most of you are probably familiar with a long option. I think it's probably one of the first strategies we get to after we get the idea of trading a stock and we're looking for it to go up is like, hey, let's do that with a call option, buy a long call option. And if the stock appreciates, then price of the option should appreciate exponentially in relationship to that change. And so many times that we'll use long options, typically they're going to be a directional strategy, meaning we need the stock to move. We need it to move pretty quickly to help avoid time decay. And we want to get out on first signs of weakness. And sometimes that's kind of hard to judge. Well, what is a first sign of weakness? As we talk about that here today, we'll look at different examples. We'll talk about that. Long options are typically what we call vega positive, which means if implied volatility goes up, typically the price of the option is going to be helped with that because that part of the premium associated with volatility, if it goes up, yeah, our option price goes up, and we like to see that. The most we can lose in a trade is what we put out. Okay, if we put out $600 on the trade, we could possibly lose all of it, although that's not going to be our intent. Typically, we're going to put in a target and stop with these types of trades. Now, let's hop on over to my Thinkorswim. And I do want to start with, let's bring up an SPX chart here. Market is a little bit down today. Looks like we gapped down on all the major indices. But is it overall still in an uptrend? Yeah, it definitely is. I want to answer a couple of questions here that came in either from a survey or a leftover comment that I didn't get a chance to discuss with you. The first one said, hey, I'd like to see more or see you approach futures options. Now, because this is not a class on futures, we can't do that. Okay, so I wanted you to know I'm not ignoring your request. But Ben Watson on Tuesdays which was earlier today. First thing in the morning, 9:30 Eastern time. He typically teaches a class on index options. I think Brent taught it today. Not index options, futures. And so that's the class where we can talk about those types of strategies. We won't be able to do it in this class, okay? In the index options, we won't typically talk about those either in this class, but I do teach index options on Wednesdays. And so that will take place tomorrow at 3 o'clock Eastern if you're interested in index options. Okay, so just wanted to kind of throw that out there for you. Another question that had come up was this is, what are some of the other things that we should look for to have better probabilities of success with long option trades? Do we need to look at sector performance? That's always helpful. Long-term trends? Sure, we could look at those long-term trends, although shorter-term trends might be more impactful because we're just looking for a short little move in the stock or a short period of time. But support and resistance levels, absolutely. All of those we want to incorporate to some extent. Now, I'm not going to go into a lot of sector analysis here today. However, we're going to focus on those stocks that do have some upward trends, maybe that are closer to support than to resistance, and maybe at the beginning of a move. I told you we're going to use channels here today. Now we're going to review just a couple of trades that we have not followed up on. All right, that we're going to do here real quick. Zscaler is going to be our first trade. We did this one a couple of weeks ago. We got in here on this nice little breakout on August 4th. So it's been a couple of weeks. What did the stock do? Ran up a little bit, pulled back, and then it had just a nice little kind of stair-stepping move, a little bit up, a little bit pull back, and then we were able to get out at our target that we had anticipated here. So we were able to get out on the 13th, which was last Thursday. And I'm kind of glad that we did hit our target. We are out because what has the stock done since then? Just kind of gone sideways. Yeah, and so we'd be experiencing some time decay, we'd be experiencing the price of the stock dropping back. And so some profits that maybe we could have captured, right, they would be dwindling at this point. But let's look at show you what the numbers actually showed on this trade. So we have, we bought this contract. It was a September 18 expiration, so we had plenty of time. We spent $18.20 on it. We got out at $28.95. So we came through with that a profit of about $10.75. And that gave us about a 59% return in kind of a week and a half time frame. All right. Sometimes we'll hit maybe really swing trades that just maybe last a couple of days and don't have much distance. We might refer to those like singles. I'd say this one, with 59% maybe is in the camp of, say, double. We're talking about it is baseball season, right? Then maybe it's a decent gain, but not necessarily one of the biggest ones you've ever seen. Okay. Next one we need to follow up on is CrowdStrike. And on CrowdStrike, we were in this one a little bit longer. In fact, we bought a contract further out. I believe it was dated in December. We got in here on July 9th, and the intent was to let it run for a little bit, run a peak and a pullback and a peak and a pullback. We had talked about maybe treating that option like we might treat a trend trade. And so we have been in it, and we have done that. We have weathered the peak and the pullback. During this pullback here, when we had like 6 or 7 days of a bearish candle and pullback, some of you might have been concerned because it went through, broke down past our diagonal support here. In any case, it recovered, it ran up, pulled back, and then on this particular day, this is the 7th of August, it looked like it was getting up here near a resistance area. And it also put in a candle that day that was kind of at a candle that says, we might be reversing here. We've got what we call a dragonfly doji, and it is a potential reversal candle. It requires confirmation. In this case, it actually went up higher the next day. But we made the decision to get out because it was at resistance again with a potential reversal candle. All right, what were the numbers on this trade? So on CrowdStrike, ignore the one that's the vertical here. Again, another expensive contract, a 182.50 call. Like I said, dated in December. It cost us $30.85. That day we got out at a decent profit. $50.60 was the amount that we were trend trading at. And with that, we had a gain there of about 1975, which equated to about a 64% return. Okay, so this one took a little bit longer. We got a little bit more out of it percentage wise. And, the trend actually is still going. All right, now it's pulling back right now. One thing that makes your trading easier is trading the same things over and over again. Now, some people might have wanted to have been out before earnings. Earnings are going to be on the 26th here. So next week, we'll have that earnings announcement. In any case, that's what's happened on those two couple of trades. Now, Carol says, ZS was a nice profit in your live account. Good for you. Happy to see that. And those of you that are maybe trying to get the hang of it, hopefully these are giving you some good examples that you can paper trade as well. We're going to go through several additional ones here. Now, over here on the left, we have our liquid options watch list. And this is where all of the stocks that we're using today came from this watch list. The date on this, let me go find it here, was called Liquid Options with the date of August 4th. And so if you're like, oh, I didn't catch that class, I don't have these stocks, you might want to go out, look at that particular session where we created this watch list, okay? We're going to use it for this month, maybe even into the month of September. Maybe we use it about 6 to 8 weeks before we refresh it. There's no need to refresh it every week. There's no need to rerun it. The results are not going to change all that much, okay? We're looking for really liquid stocks. We hope that leads us to really liquid options. A lot of them are going to have weeklies, which is nice. That gives us some potential of, maybe we trade in some weeklies where it makes sense. All right, so the first one we're going to look at here is Dash, which is DoorDash. Now, DoorDash announced today some partnerships with several retailers. It was with Gap, Barnes and Noble, Carter's, and Kohl's that they're setting up contracts with those retailers to do delivery. So if you want your books delivered, great, Barnes and Noble is going to be on their list. So that's a nice little news event that's giving some fuel to the stock. Now it was up here higher earlier, and I want you to see kind of where it's been trading in this diagonal channel. Now, when we draw the channel, you want at least 2 lines or 2 data points on the bottom and at least 2 on the top, okay? So that it can show us the full range of where it's going. And sometimes it'll be outside of the range. So on the bottom here, we have a couple days where it was outside of the channel and then it popped right back in. Now, where it has been currently has been around kind of the midpoint of this channel. Now, we could maybe see some resistance there at about 218. It's kind of pulled back from that earlier today. It was looking like maybe it was going to break above that. But the one thing I noticed that it did have lots of shadows, kind of like, yeah, trying to get up there, but just kind of fading. However, it looks to be using kind of that midpoint of the channel right now, kind of as a support area. And so I'm going to anticipate that this stock is going to stay above the midpoint of the channel and that might act as a kind of a bouncing point for it. And we're going to look for this stock, maybe give it a couple of weeks to get up towards kind of the far end of the channel here. Now, one thing that we could do here, we've got kind of, it looks like it could be a breakout or might even be considered a bounce off the midpoint of the channel. So we're going to put a target up here. I had a target here in the neighborhood of about, let's see here. I had 229. That's up at about 236. Where's 229? 229 might be a little bit sooner than clear at that edge, but actually I think we could maybe go a couple of weeks and go out a little bit further. You can see we have some time out in front of us. There's no earnings announcement that we need to worry about. So go out here a couple of weeks in time, and let's put a target here about 236. This is 236.12. So let's use some scratch pad down here. 238, did I say 238.24? I think it was something in that neighborhood. Let's get back out here. Yeah, we went all the way up. Let's go a little bit short of that. 238.24 is good. Now, what about a stop loss here? We are counting on this stock really staying above this midpoint of the channel. If it went lower than today's low, it still could be working out okay, but let's give it not a ton of wiggle room. Okay, so maybe we'd say, I'm going to put my mouse, a little bit below the low. If it really in the next few days really came down this low, I would be thinking, oh man, it's probably going to retest this edge of the channel, not stay consistent with the midpoint. Okay, so we're just going to go a little bit below today's low, which is about 212.66. All right, 212.66. That's where we're going to put our stop. We'll put an S there for the stop and a T here for the target. Okay, so we're going to base the price of the option hitting one of those targets based on the price of the stock, giving it plenty of time. Now on this, let's go to the trade tab here. It has decent trading volume, almost 3 million shares traded today already. And it does have some nice weeklies, but they're not super liquid. If we want to be in the trade maybe a couple of weeks, we need to give it plenty of time. And so, maybe if the 45 days had a lot of open interest, we might consider it. It really doesn't. Okay, so, or I should say the 31 days doesn't really give us enough time. So I was going to come out here to, let's see what these 45s have. This one does not have as much as I was thinking I might want. Let's come up here to the Septembers. These don't either. I thought we had some October ones here, which we do not have one of those here. I guess because we still have our monthly that's going to expire this week. Then we have the 18th. We're going to go with the 18th. Coming out here to November really is a lot more time than what we need. But actually, do you know what? The open interest here is it's a lot better than in the weeklies, okay? My ideal would want to be an October monthly, but we've got to wait till next week before that comes on, okay? And since this one just doesn't have a ton of open interest, we could go deeper in the money at a 65 delta here. Actually, let's opt for that. Let's opt for the 45 days worth of time. This contract here that does have more open interest, because we'd rather be a small fish in a big pond, right? Instead of 3 contracts, 2 contracts. No, we don't want to get stuck in something like that. Let's go ahead and do the 210s here for October 2nd. That should give us a couple of weeks to move and more than a month for us to have a lower theta value wearing against our option, right? Because every single day that we hold this option, it's going to decay. Mary Burns says, the anchored VWAP is at about 205, which we could use as a potential maybe stop area, right? Around 205 would be about, I'm going to just get it close in the neighborhood, maybe about in this range right here. So some might feel comfortable going down that low to start out with. We're not going to go that low. If it starts to retrace, we want to go out pretty quickly. Okay. All right. So we're going to do what we could do here is just do a buy custom with an OCO bracket. And that's how we're going to put in our target and our stop. So both of these we're going to change to market orders because we don't really know what the price of the stock would be. This bottom one is going to act as a stop, even though we're going to set it here as a market. Both of these are going to be good till canceled. And the first one we're going to put as our target. So on the target using the channel, we're going to say, all right, if it gets greater than or equal to 238.24, then we want to get out. However, if it starts to go lower, we're going to call it a little tighter here. We're going to do 212.66. If it gets lower than that, then we want to be out. Let's make sure our arrows are going the right direction. So greater than or equal to 238, less than 212.66. Let's go ahead and hit save. And we're going to put this in our long options. We're going to be active with the stop loss. We're going to try to inch it up. If the stock moves a decent amount, man, we're going to move that to a break-even point quickly. Then if it moves a little bit more after that, then we're going to try to adjust the stop loss and kind of inch in and try to kind of capture whatever profits there might be. We're not guaranteed it's going to go straight up. Stocks don't typically just go straight up, but we are going to hope that this one, let's see, time in force, market must have a day force. Oh, do you know what I need to do? Let's just I put both of the conditions on there. Let's get rid of this second one because I put both the conditions just in that first order. Okay, so we'll just have a first trigger sequential, either of those options. And let's go to our long options bucket. All right, there's Dash. We're going to follow up with it. Oh, that gave us a much nicer buy price. Probably the stock might be continuing to pull back a little bit. We're going to expect it to stay near that channel level. Next up, this is another one. Some of these are a little bit expensive. Some of these stocks that are moving real well. This is Adobe. Well, what's going on with Adobe? Well, it's been in a nice diagonal channel here as well. We can see recently it came down, touched the edge of the channel. Some of you might be looking at that and saying, well, it kind of looks like it could hold as well, right? Where here's our little pullback in our uptrend. And today, I mean, we're not at the close yet, but if it were to close there today, we'd be saying, yeah, we've got a close above the high of the low day. Right now, we've got a trade above the high of the low day. Ed wants me to slow down here. Well, just trying to give you a lot of content, okay, as far as the analysis, the numbers. This next entry, I'll go a little slower. Maybe it's the actual entry we want. You want a little slower. Well, where could be a potential target? I want to go back here in time a little bit. I want you to see a little bit longer range chart. I want you to see maybe where the previous peak had been at a previous earnings date. Okay. That's up here around 285. So I've drawn that line across as maybe this could be a potential target here. Let's zoom back in. And, you know, maybe we look for this to head on up to the edge of the channel, kind of where it hits that the horizontal resistance around 285. So we're going to put a target here. Let's go just a little bit below that 285.32. Let's put it at 285.12. Okay, that's going to be our target. Now on this, it looks like really if this price went down below our diagonal support in the channel, we'd really want to be out. Again, we would want to adjust the stop day to day, get it to a break even quickly. There might be some other technical indicators we might use. We might use this midpoint of the channel. If it looks like it's maybe staying above there, maybe move our stop loss a little bit above or a little bit below that midpoint on the channel. But for our starting point here, we are going to go just a little bit lower than today's low. I had written down maybe here at about, the low here is 258.19. And I was thinking maybe go at about 250. Let's see here, the low 258, maybe just a little bit lower than that. That would give us a value of about, looks like, let's go just a little bit more, 255.80. Okay, it really does come back below there, yeah, we might want to. Now, if you wanted a little bit looser stop on that, we could come down here to the diagonal support, and that is about 255 or 250, 255. If you want a little bit bigger stop loss on there, we could go with something like that. In fact, let's change it. Let's go just a little bit below that. Let's go 252, 252.22. So let's change that, 252.22. Again, we're going to be watching it every day. We're going to move up our stop loss as well. Deepak says, hey, let's look at the volatility as well. There's a couple of ways that we can do that. We can do that by adding a study, which we can do, of implied volatility. We can put that on here. Imp volatility. Let's try it again. There we go. I always like my bottom one to be the volume here. All right. So if we say, well, where is volatility? It might be ramping up a little bit before earnings. Adobe and some software companies and retailers are kind of at the end of the earnings season. So their earnings look like they're going to be on September 10th. We would hope to be out of the trade before then. Okay, we would want to be out before then. Let's see, Lakshmi says, on Adobe, it's a broken chart, not a broken company. You're giving us some additional details about the stock. Thank you, Lakshmi. I would say it's not in the highest that it's been, but this is certainly is a stock that has it moves, right? So it's going to have probably some implied volatility priced into the options, right? So we're seeing here 45, 55. The one we have open here, the October 2s, is a 51. So yeah, it's expected to make a movement. In fact, on the options that we're going to buy, the Octobers here, it's looking for a plus or minus $39, okay, before the option expires. So by that option's expiration date. All right. Now on Adobe, we've got a couple of opportunities here. If somebody said, I'm just looking for a real quick move, maybe that just takes place this week or for a week, they might consider doing, say, the September options. It would be aggressive, wouldn't give you a ton of time. But if you were like, I'm just in there short term, you could consider that. We could also go out to the October options. In October, there's plenty of open interest here as well. And so we're actually going to do two options here. Normally, you're not going to pick two options, but I'm going to do it for comparison purposes. Okay, so we're going to do a more conservative one, which will be this October 16th, 265, because that's going to be kind of our at the money based on what the price of the stock is right now. And so we're going to queue both of these up, but we're going to use the same target and the same stop. And then we're going to see kind of how it plays out, depending on if we had a lot of time decay, depending on if the stock moved, depending on if implied volatility went up or came down. Okay, we're going to kind of track them together. So let me queue up the October one first. And actually, let's do buy custom with, no, I don't necessarily want the bracket, but we'll start out at the bracket. This one first trigger sequential. We'll get rid of this second one, and we'll put the price of the stop and the target in this one line item. So we'll change that to be a market order. You know, we don't know what the price is going to be, and it can't be guaranteed anything when it hits the price of the stock. Okay, so just be aware of that. And we're just going to do the same thing we did. We're going to put a target based on the marked price greater than or equal to 285.12 for our target. And here, we're going to do our stop if it gets less than or equal to 252.22. And again, the expectation is that we're going to be increasing our stop loss. And it doesn't want to punch in here. What is the problem? Maybe it, there we go. I guess I had an extra little space in there. So 252.22. Again, go down and check your arrows. Make sure you've got them the right direction, greater than or less than. Okay, we're going to do this again for the second trade. Again, you normally are not going to do two trades. Long options, there we go. We're going to do it just so we can compare something more aggressive with something a little bit more conservative. So on this one, we are going to do the September 18th. We've got about 31 days in those. We're going to still do the at the money strike price, 265. Plenty of open interest there. Let's do a first trigger sequential, create an opposite order. We're just going to put in the exact same thing that we did on the other one. We're going to look for a condition here. We want the price of the stock to be at, greater than, or equal to 285.12. And I'm going to ask you a question while I'm filling out the rest of this order. And the question is, do you prefer, for your own personal, like what you might pick, would you pick the September option or the October option? Okay, go ahead, chat that in while we finish queuing up this order, getting it set to go. And 252.22. Let's see how that looks. That looks like that is in as well. All right, we don't know the price of the option if and when it hits either of those. All right, we're going to hit save, and we're going to do some comparison as far as hitting targets and compare, did one hit the target sooner than the other? They're both based on the price of the stock. So I think it's going to be more a matter of they should hit the targets or the stops near the same time frame. But let's see how we end up percentage-wise, and theta decay. How does that influence the price of the option? All right. So most of you are saying you well, there's a couple that like September. There's a couple that like the October option. I think the October has a few more votes there. Pickle Pug says timing in the month. Think I would pick the October. Yeah. There's not a right and a wrong. We're hoping they hit those price targets. We'll see. We'll see how they play out. All right. Next up. Well, we've got a few that I would like to go through here today. Let's look at this one. Netflix. Netflix has been struggling for a little bit, right? But recently, after its last earnings and dropping down, it's kind of scraping its way back into things here. It's in a very small channel. Okay, this is not a very wide channel at all. However, what does it look like it's doing here? If we didn't even have the channel here, we'd say, oh man, looks like it could close above the high of the low day. The high is 78.53. Stock's at 78.56. So right now it's barely above it. So it might end up being a close above the high of the low day. Right now it's at least trading above it. Okay. Now on this one, I'm going to have an idea here that we want to give it the opportunity to make a few moves in the channel. This channel is so narrow that, you know, from top of the channel to the bottom of the channel doesn't take that long, right? Say we're at the bottom of the channel here, 1, 2, 3 days it's up, a couple days back, okay? So we're going to look for it to ebb and flow a little bit. We're not going to look for it to hit the channel the very first time. We're going to have some patience with it, okay? So we're going to go out here a little bit in time. A target that I was looking at here was about coming out here a couple of weeks and then coming up to the top edge of the channel. So 825 is a week. We go out another week. That's going to put us at about September 1st. Okay, so we'll go October 31st here. And that looks like it's at about we're going to come down off the top of the channel a little bit. That's about 84.56. So again, let it stair step its way up if indeed it continues to trend in that direction. We're going to need a little bit more time with this one. Okay. What about the stop? The stop, what we're going to look for, because there is also that horizontal support level, which is actually a little bit longer term. Let me show you. Coming back here was a support level around 75. And it's looking like maybe that is just a little bit below the channel. So we're going to give it a little bit more room. Okay. We're going to go below here, that 75-ish, for the initial stop loss. If it edges on up, man, we're going to move it up below the bottom edge of the channel. Okay, so we're going to go here just a little bit below 75. Let's go, say 20 cents. Let's go to 74.80. And hope tomorrow or the next day that we're ratcheting up that stop loss. We do need a little bit of time here. We're not even going to consider September. We're going out here to October. We're going to choose those October 16s. And on this one, 78.55 is where the current price of the stock is. So our 77.50 is going to be our at the money option. Somebody wanted to be more conservative, you could buy something in the money. That wouldn't necessarily be a bad idea, given that we want to hold on to it for at least a couple of weeks. So on this one, we are going to go a little bit deeper in the money. We're going to go with our 60 plus delta, which means we're going to grab this 67 delta. We're going to go with the 75 here. Okay. Oodles of contracts out here. Oh, we love seeing 27,000 open interest contracts, right? Gives us a nice narrow spread there. Okay. Let's see here. I'll go back and answer that question, Chev. We'll come back here. All right, let's go ahead. Let's place this trade, then we'll have some discussion. Let's just go ahead and buy it. Do a first trigger sequential. Again, we're basing it based on the channel price. Where we're hoping that it gets to, we don't know if it exactly will go there. Let's create an opposite order. Same thing, we're going to make it a limit order and put the condition based on the price of the stock. Let's come over to our order rules. So initially, if the price of Netflix based on the mark gets greater than or equal to 84.56, we want out of the trade. Or if it goes down on us and gets less than 74.80, then we want out of the trade. Again, we're going to be looking at it every day. We're going to be adjusting those stops. Hopefully, if the stock progresses like we'd like it to, and it's just kind of doing a little stair step. If it pulls back for a day here and a day there, we're not going to be overly worried. Okay, but there is a nice steadiness in that narrow channel. So we're going to hit confirmed and send, and let's answer some of your discussions here. That one's going to go to our long options as well. All right. Chev said, you watched, let's see, you're recently joining, not a problem. Can someone help me confirm the decision of entry is because Adobe has a hold? Let's go back and look at Adobe's chart again. And yes, just because Adobe has a hold and it just had kind of a nice little bounce off of this channel area. Okay, so that's the technical setup there. When we're talking about either September or October, Mary has a good point here, October because of theta, meaning the theta decay or the value of our theta is going to be smaller out in October than it's going to be in September. Pickle says, would we want to be out before the expiration? We always want to be out before expiration, always, okay? And the sooner we get out, the better. So if it goes, it runs up, hits up here somewhere, where our target is, great. We'll be happy campers about that. Now, you said, I mean, unless we want to own the asset. Now, you can always exercise your right, right? You could exercise your right on that option to convert it to stock. However, most people that are buying options, just long options, are looking for the price appreciation. They're looking for the leverage that the price of the option gets when the stock makes a comparable move. Okay, that's what the focus is on. Now, Carol says, like be out before earnings next week. Let's go back to Netflix on this. They actually had their earnings back here July 16th, so we're not going to expect them to have any earnings until October 16th, and we would expect to be out well before then. Even though technically maybe we could hold it over the earnings period, that's not going to be our intent. Okay, it's out here ways, not even showing up in the calendar yet. All right. Let's rehash. Let's summarize what we've talked about today. We saw a couple of our trades hit their targets nicely for us, which we always appreciate when trades go the direction we wanted to them and thought they might be going based on the technical setup. Long options are very technically based. We're just trying to take out, either one move or maybe a couple of moves. Right? We're not intending to be in them for long periods of time with the time frames that we've chosen today. Can you go out longer? Absolutely you can, right? And then our 3 new trades we based on the idea of where the stock was in the channel. So let's see here. Let's come over here. See our field orders. So we had 4 trades here. Dash. We did 2 on Adobe, more for comparison purposes. You wouldn't normally do that. We're just going to compare. And then out here on Netflix will be the last one. So 3 different stocks, 4 different orders. Now, my time is up, but a couple of things here. I didn't see a survey here today, so you guys are off the hook for survey purposes. However, if this was helpful to you today, give us a like on the way out. That lets others know you found value in this content, and they probably will as well. James and I are on X. Would love to have you follow us. And then subscribe to our Trader Talks channel. When you subscribe to our Trader Talks, and I was going to kind of show you that, but I'm not seeing it here on my screen. When you subscribe to our Trader Talks, it's easy to see our content. There's a little blue subscribe button, looks like a YouTube logo down in the bottom right, kind of below my chart. You select on that, that allows you to be the subscriber. If you select it again, it says you're not a subscriber. It's kind of a toggle. So make sure you only click on it once. Now, just as we wrap up here, I'm going to show you one chart. We don't have the opportunity to get into it, but it is on our list. Okay. I'm going to take our chart here to a weekly chart. Okay. On a weekly chart, you see this price pattern more evident than you would say in the daily chart. Now, this one is not necessarily a channel, although it could be, but the dominant thing I was seeing on this was maybe a little flag pattern going on here. Looks like this week it's breaking out of the flag pattern. So we could use the distance as the flag pole as a potential target and a trade back into the flag consolidation area. We could use that as a potential stop. We don't have time to queue up that trade, but if you're interested in practicing another, that might be a potential setup for you. All right, James, I appreciate your help here today. Thank you each and every one of you. Appreciate the energy that you bring and the curious questions. I love making sure that you get your questions answered. All right. If you do have a question later on, go back to the recording, post it in the notes for our YouTube video there. All right, everyone. I'll be back tomorrow with index options, which I mentioned. Right next is going to be Barb Armstrong with Getting Started with Technical Analysis. So take a little break. We'll see you back here at the top of the hour. We'll see you then. Bye-bye.